let's start with why. When I first started Dorr Capital, I was having lunch with a friend, and this is about a year into the business. I said, well, what have you been up to? What are you doing? And at that time, we were doing a lot of mortgage brokerage and loan syndication and servicing for large institutions. The thing that caught his eye is that I was telling him that we were structuring these deals so that there was an A piece and a B piece, and the A piece was sold to a large institution, and the B piece was a smaller institution, or a family office, and this large institution would get 6%, and then the biggest the B piece institution would get 12 to 18%. He says to me, how do I get involved in this? And I'm looking at him going, well, why would you want to get involved in this? And he says to me, well, if these investments are good enough for institutions, why wouldn't we want to be a part of it? And he says to me, the largest families in Canada and all have a big piece of their investment portfolio in real estate. It dawns on me that, okay, we can do this, and that we have been producing a product while working for these institutions that people really wanted and needed as part of their portfolio as an individual qualified investor, and that we could provide this product direct. That's actually how we started the loan syndication business at Dorr Capital, which eventually led to our mortgage fund. You're interested in investing in mortgage. There's a bunch of questions you need to ask yourself. And the first one is, do I have a mortgage broker or an exempt market dealer advisor that can put me into one of these products? The other thing you need to ask yourself is, do I want to put this in a tax sheltered account, or do I want to have it in a cash account? That will also determine the type of broker you're going to and the type of either mortgage fund or MIC or limited partnership that you're working with. Do you want to earn interest income, or do you want to have capital appreciation? This also determines whether you really want to be in a mortgage, because a mortgage is a fixed income alternative. So it's like interest income. Do you want to invest in construction loans? Do you want to invest in land? Do you want to invest in income producing property? Do you have some other form of real estate that you want to invest in? These are all other questions you need to answer. The other question is, where do you want to invest? Real estate is a locational thing, location. So you need to be thinking about, where do I want to invest? Do I want to invest in Toronto, Vancouver, someplace else in Canada? These are important questions. The next question you should ask yourself is, what is your risk tolerance? Are you investing with money you can afford to lose? How much do you want to invest? And do you actually even qualify to make this investment? Like, are you a permitted investor? Are you a non-permitted investor? Or are you an accredited investor? These are all questions eventually you're going to get asked, and you should be asked. And depending on your answer, this will determine whether or not you're actually qualified to invest in this, or what you want to invest in. So we're going to give you some examples just to kind of flesh this out a little bit for you. But this is where you need to start.